Hey
Hi,
guys, good
Lydia.
morning,
Hey,
everyone.
Lydia.
Good morning, my
Good
trading warrior
morning. I lost
sister.
track of time looking at the charts.
Yeah, you know,
We've all
just
been there, Lydia.
yeah,
I know
obsessed with
you
a
guys understand.
candle. What a romantic chart with all these candlesticks.
You
Don't you
guys don't
think?
understand.
All right, thank you, Steve. So Steve will stop sharing, and then we'll get
Nice to
your
see you, Lydia. I hope
screen up
everything's
there.
okay
You
there.
too, Steve. Thank you.
There you go, Lydia. You remember
Okay.
the green box.
Yeah.
How's your family and everyone okay with the pandemic and staying healthy?
Everyone is doing well, thank you. Yeah.
Good. All right. All right. So, pound's been under pressure. It's been underperforming almost everything. So, wherever you want to start, Lydia, go ahead.
Okay. So I'll start with the pound yen. I know this crowd
Okay.
loves the guppy. And also I'll start with just some prevailing themes. Fundamentally, so the pound right now, we're just seeing pound weakness right across the board, and I think the pound is trading on a couple. I think forex might be trading on a couple of things, and one is which might is not scientific, but it seems that the currencies with countries that are reopening well, we're seeing strength there. So in the UK is probably one of the laggards when we're looking at the major currencies. So we're seeing that kind of weakness. We're seeing strength in like Australian dollar, which is a proxy to China being open or reopening first. Also with New Zealand, with their news around eradicating the virus, we're seeing the New Zealand dollar has just has been on a tear for the last like 2-3 weeks,
Yeah.
and particularly against the pound.
Great
And then
observation, by the way.
yeah, thank you. And then pounds just dealing with Brexit still.
Still.
Uh,
Yeah.
so
Yeah.
when we're seeing these rallies in the pound, they've just been opportunities to sell, particularly if you caught anything last week or the week prior. So I'm looking at yen. I'm going to dial up with the yen. Um, Yen, I saw at last week, it was coming up against resistance. And a lot of these things have been kind of resistance to support, was what I've been seeing. And until we get some true trends, and that was prior to last week. Last week, I feel like we've kind of established some trends. Um, and we might see some reversals, and this is why. So pound yen, you'll see it broke the 618 last week after topping out at resistance. Here I have at a
Yeah.
136.46. And I thought it would find, some resistance at the 618, but it broke last week. And, if you followed me for any amount of time, I think that's a signal for a reversal of the prevailing trend, which in this case was to the upside. Then we had a correction, but it continued lower, broke that 618, and it fell. And we should get to see a reversal of the prevailing trend to the upside and come back to lows. But before those lows, we have this support at 131.55, which is essentially where we opened this week, closed last week Friday, opened this week, and we've seen price find resistance. Find support and start to move higher. And it looks like it could be just a correction. We get a bounce. Some would call it a dead cat bounce. We would get a bounce and then turn lower. But as we start to zoom out, you'll start to see that what we're really seeing, I'm just going to step you through. You all will start to see my methodology. So after this bounce, it was a correction until we got the move 2 weeks ago through up into 140, which broke the 618 to this side, which just means overall, like we might be looking at an uptrend. So just to clean some of this up, let's move out to the weekly chart. And so now I'll just start to clean some of this up and remove this broken fib here and remove this one here. And then just put a fib over the entire rally from
Yeah.
124 to 140. And you guys, we're just in a correction to the downside. In
Yeah.
fact, we're
This would
seeing
be the second higher low if we hold in here.
exactly. Or the
Okay.
next, or after that, the second higher high, if we're going to the upside, right? And
All right.
that support has confluence with the 50% fib. And, I like pound always correcting into the 50% fib, this could be just a huge opportunity to buy that takes us above 140. So of course we have some resistance level. We have 136 still to contend with, and before we get there, but this could just be a setup for longs. And so if we see risk appetite pick up, we see stocks start to, stocks languished last week in the face of this yen rally. If we start to see yen, sell off, and we see pound yen start to rise, that is an indication that stocks could get another, kind of another fire, another tailwind, and move higher. We might see the S&P 500, break above 3,200, which, opens it up for all-time highs. So
Okay,
that's what I'm seeing.
what was the upside potential you had in Guppy again in the previous chart? 160, did you say? Or are
I
you
said
off the weekly?
but we needed to, I said 150. Yep, I
Oh,
said
150,
150.
okay.
But those are notorious like 149.
Okay.
Where we're seeing 149, 148. I'm sorry, 148.
Got it.
Yeah,
Got it.
it's like that huge resistance. But yeah, I said
Okay.
150 was quite a possibility.
Okay.
So that's what I'm seeing, and that's if we're headed to 150. This is just one hell of a setup. So that's what I'm seeing, and if it coincides with risk appetite in equity markets, there you all go.
So if you get long here, Lydia, do you risk the low at 61.8 at 130.06 or so?
1/3. I could make it tighter than that. Tighter than that, like last week's lows. Or the support level 130, 155. Yeah, you could keep it really tight.
Okay.
At this point, it's 100 pips away. But if it falls and you get in on a fall into the support, yeah, you could keep it tight. You could really control risk that way.
Thank you.
All right, so we'll move to the dollar. So dollar was, we got a lot of dollar strength last week, and it went right into support. But again, this is the 61.8. We got a break technically, really a breach. A break, we kind of want to see it stay underneath the level and continue with some follow through. And writing this down, taking it into support, watching how the week opened, noticing that we're at the 61.8 level. And again, kind of with the themes of risk appetite, what I was seeing in the yen, this looked like another long setup here. So let's dial out. This is a 4-hour. I'll just kind of zoom out, step it out. Okay, so this is really just a second wave higher. We had a long correction into the fib, and same thing that we kind of saw with the yen. We have this larger 618 breaking. So to me, dollar weakness is just going to be a tug of war with dollar weakness and dollar strength. I think we'll see a lot of weakness. We'll see a lot of strength. I think overall we're going to get this meltdown in the dollar, which will see the pound dollar melt up, and it's going to melt up against the pound, and in particular just because there's so much pound weakness, right? So it's just going to take more for the pound just to rally, particularly. So against the dollar, we can't see any kind of dollar weakness. I think we're just going to probe higher and higher highs. So again, I think it's going to be a tug of war. I don't think it's going to rip, but I think this is a setup off the 61.8, which can take us finally take us above resistance at 127.75, which just opens us up to 130. So I think in April I was looking for 130, but was aware that we're hitting resistance, and that's when we were making this kind of double top into 126.34. We made this correction. Now we've hit the next resistance at 127.75. We've corrected again, what I think could be another long opportunity in the pound dollar that takes us into 130. So that's just what I'm seeing. We'll see. Again, the dollar is more of a tug of war just because it has the reserve currency status that makes it in demand internationally as a reserve currency. But the Fed has been leading the way in easing in unprecedented ways. So that's just going to weaken the dollar fundamentally. So that's my look at the pound for the week ahead.
Okay.
Then the euro pound, one of my faves too. So the euro pound, I think is going to see a melt up as well. Euro pound might actually start to be more of a trend because of the pound weakness. As we rally, we get more pound weakness. And so I think that this break above 90. So if you guys could see my green lines, with the pound, euro pound, I'm going to zoom in. So we were range bound for about 4 weeks between 90 and 88.50. We got last week we got a breakout of the range, and if a breakout of the range for me, we'll usually see a retest of the range level, and then a breakout that moves higher. So I leave the fib on here just to see where, you know, we see sellers.
To see where I was saying I was going to buy it at that level, right?
Well, I was going to say where sellers might be able to step in. So it's still,
Okay.
I still agree with you. We're going higher. I like the breakout of the range to the upside. That just gives me a little bit more conviction. And I think you can buy going into 90. If we fall back into the range on the daily chart, which is a quicker signal, even the 4-hour. But if we fall back into the range against the green lines, then we'll probably likely test 88.50 again, or look to go below 89. But yeah, Dale,
what do you think longer term? Do you think we could go for that March high up there at 96 and maybe even trade parity?
I think just because I don't see not even the coronavirus has softened the stance the UK is taking with the EU. And so, yes, I think that we can actually revisit those highs as we move closer to December 31st, which is kind of the ultimate deadline, deal or no deal. So I think it's a possibility that if the UK continues a hard stance and not willing, an unwillingness to be flexible, that yes, I do think that we can revisit those March highs as, I think it's quite a possibility. But I favor this to the upside too. So Dale and I are in alignment on the euro pound. It's been a couple of years.
Now I'm nervous.
And then with the condols, you'll see really these one like pound kiwi haven't been. It's in a train. It's not a train. I trade on corrections. I enter in on corrections. And so this has just been one that I haven't been able to catch. I haven't really been able to catch since 2. I think I took it 1 week as a weekly. I took it 1 week to the downside. From here. And then I haven't been able to catch it since because it just hasn't given any kind of
consolidations. It's just a straight line move.
It's just seriously a straight line. It's literally been looked like 4 weeks to the downside. And this is, we open up no different, breaking support. This break of support should take us into the next level of support, which we have the 200 moving average on the weekly chart. So let's see if,
where would you sell a rally here? If we got one, even if we move lower first, what would be a good level?
A rally probably takes us into 194. I think the underside of all this support probably be the best rally. It's not, if we went really in using a fib, I'd probably put a fib on an hourly chart just because these moves have been just so, like you said, a straight line. You see these little corrections have only been lasting about 4 hours, and then we're down to the downside again. So you'll see the same thing with the Australian dollar because again, as a proxy, a Chinese proxy, and we're seeing strength there. So we're just, again, those two currencies in particular have just been pushing the pound weakness, right? So we're just seeing a lot of moves to the downside. On a larger scale, we're in the fibs when it comes to the pound Aussie. So maybe we'll get support into 175, which, we've seen a bounce before. We've seen false breaks and then moves to the upside. So, but, that's 500 pips away. And I think that we can get there now that we've broken below 182.
Okay.
And then the pound CAD, this is a little different just because of the oil story and the Canadian economy is still not as opened up as compared to China or New Zealand. So, but again, with the oil's getting a little bit of a bottom right now, short term, we've seen the Canadian dollar also strengthen, particularly last week. So now we're getting a bounce. So Canadian dollar, I just haven't seen a clear, in the weed, when you're in the weeds, this move to the downside seems obvious, but it wasn't, it wasn't obvious. And it wasn't one that I was looking on, to be honest with everybody. During this time with more volatility, I have been concentrating my view on the dollar, the euro, and the Kiwi, and the guppy. So I've just really consolidated from the 6 to the 4, but still,
It only takes one, Lydia. You don't have to be right every cross, every instrument. If you really have conviction on one, you could just stay with the date that brought you to the dance.
You're right. You're right. And I've been doing really well with even an even more narrow view in these past 2 months. So yeah, I agree with you. Just to be fully transparent, some of these pairs I just haven't really paid attention to the pound CAD in the last 2 weeks, just to be fair. But yeah.
Okay. You want to field one question from
Sure.
an attendee? Paul is asking, hi, Lydia, love your analysis as always. Please project us into early 2021 post-Brexit transition period and a potential deal or no deal, post-U.S. election, and post, hopefully, any second wave of COVID. Where do you see cable versus USD? Euro, is there any chance we can get back to 140 and back to 125, 130 in the euro?
Okay, so
they're really asking you to be like
a crystal ball.
Yeah.
A real, so
you may not even think that far ahead, do you?
I haven't. I've been thinking just into Paul, as far as I've gone is into Labor Day. I'm just, trying to see where we get, how countries are getting through the summer. But if I do
it's not your thing to be a predictor of long
No, it's not a
term.
predictor. If I just look at the charts, I mean, if I just look at the charts, we're headed to 130, the dollar, and the dollar weakens more from here. Like that would be my overall picture. I wouldn't be surprised to see us weaken as high as $1.3350. I think the dollar weakens, but that's just on a fundamental view. I don't think it's going to be a clear cut, and I think it'll depend on the currency. So I can't say where we'll be because of around the election with that much change. We might see the dollar really strengthen just because of uncertainty. It's hard to tell. It's hard to say how the market reacts with pound and Brexit. We could see the UK soften. Maybe they don't have as strong of an economy now, and they concede to what the EU would like out of this withdrawal agreement, and we see the market rally the pound in a situation like that, just because it's such an opposite reaction to what we've seen so far and how the market react to it. So there's a lot of things that could happen going into 2021. And so I would say, just because of the environment that we're in, you don't even need to project that far ahead. You should take it month by month, season by season, because we're in a totally different season right now than we will be when we enter the fall. And, people are back at the trading desk. People I don't know if the people went on vacation. It's a little different this year. Maybe we'll have a lot of liquidity this summer because everybody's just still at home and still in the markets anyway. And
my short answer for a question like that is I don't know.
I don't know.
IDK. I don't know. And you know what? It's better it's wisdom to say you don't know instead of trying to figure out what.
You just fundamentally, I'm just looking at charts, and I like the dollar weak from here, and how we get there.
I'm kind of thinking from your guppy call that I know you're an RIA, constructive equities going forward.
Oh yeah. And that
Fed bought us a few years. What do you think? The Fed actions bought us another couple years of a bull market.
Yeah, I mean, for anyone who, sorry. And I've just been telling people, you just, like, if you've never seen it in action before, you're seeing it right now. Don't fight the Fed. Like, for whatever you think about the economy, just know that the market went through all of that in March price action. So the market is already in 2021 in stocks, in my opinion. And they're not, I think a second wave, however it's reported, is probably what makes us revisit lows. I don't know that we'll break to new lows, even in a second wave scenario. I think the market is really like, we're gonna figure it out, whatever that solution is, whatever the new consumer behaviors are. And thank you, Federal Reserve, and other central banks too. And we're just, this thing is, the stuff, equities, yeah, I'm very constructive on equities. And I think, I think a new dip or a new fall in prices is likely an opportunity. Big P's, I'll keep it very broad.
Yeah, maybe we could correct this recent correction from the March lows.
Yeah,
and pull back.
That's what I would see. Let's see, just pull it up when we're talking about it. Oh, take us to a weekly. Yeah, so our
I like that moving average would be a nice entry. Your blue line there.
I think, yeah, you're absolutely right.
About. Yeah.
Yeah. So a correction could see us testing lows because, you know, technically on this bigger view, this is a monthly fib. This could be a failed high, which could see us, you know, take us to this low back into the fib. I doubt it. I think if we got new lows, it would be something like this. It'd be very volatile, quick. It'd touch support and go back. Again, I said this for a long time, right, Dale? Like, I don't see these central banks allowing stock markets to crash again. So,
yeah. So you know. They've been pretty successful. So
they've been pretty successful so far.
Yeah.
Remember, I mean, 2 weeks ago, people were like, people expected a U-shaped recovery, an L-shaped recovery, and we actually got a V. I mean, it's astonishing. It really, really is. And here we are. So we trade the market we get, not the one we want or think is happening. Yeah.
V for virus.
No, Dale. V for victory.
Wrong. Lydia, you want to show people where they could follow you, get in touch with you now?
Absolutely. So you can always follow me on Twitter. I should have had the blog set up. You can follow me on Twitter. I'm posting more often now, I'm happy to say. I have more of my analysis going up now. If you want to receive this to your inbox 2-3 times when they're posted, you can sign up here to get the analysis or the charts straight to your inbox, and it's easier to find. And follow me on Twitter at F.A.C.E without the FX, so at F.A.C.E. And you follow me on Instagram. I'm trying to get more visual with my market analysis, but still figuring that out. Yeah, and if you would like to invest with me or learn with me and learn how to find these resistance or these levels on the charts yourself, you can check out my course under Learn with Lydia. It's the Charts 101 course. If you're interested in investing with me, you can check me out at Bay Street Capital Holdings, and that's under Invest with Lydia. So thank you so much, Dale, and thank you all for sticking around.
Yeah, thanks, Lydia, so much. And with summer beginning, I hope you have a great summer trading season and that pips just rain down on you.
Thank you so much,
all summer long, my friend. And
thank you
for stepping up and coming in and edifying our community once again, Lydia.
Thanks for having me.
Love you.
Have a great day, everyone.
All right. Everyone, so that's a wrap. We'll see everyone for Turnaround Tuesday. Don't just count your pips, count your blessings. And let's all have a great summer together. You're very welcome. And thanks again, Lydia, my trading warrior sister. Adios.
Thanks. Bye, everyone.
Bye-bye.